Let's talk about Snap-on. I don't see these trucks around anymore. I guess maybe I'm not hanging around the auto parts places.
They're the blue ones, right?
I don't even know. I forgot what color they are.
I thought they were blue.
Yeah.
I'll look up their.
Yeah, you look while I give some numbers here. Company again is Snap-on. Symbol is SNA. They're in the tool and accessory industry. 5.1% short on the float. That's okay, but you don't want to go much higher. 95% institutional owned. PE ratio looks okay. 18 versus 21. Price of sales high. 3.6 versus 1.5. Price to book value looks okay, especially on the tangible book value 4 versus 25.7. And then price of cash flow is 16.5. That's above the industry at 12.3. Rather have that lower, not higher. And they do have a good PEG ratio, 1.6 versus not material for the industry. Now, over the last year, this seems to be the theme today. I think like most of our companies have negative earnings for the past year. Holds true with Snap, down 2% for the last year on the earnings per share for the last year. Industry is up 21.3, so something's going on with Snap there. And we got to be careful to say Snap because that could be the other one. So this is Snap-on. Snap-on. Let me correct that because somebody just turned in like Snap. Oh, that's the social media thing.
Snapchat.
Yeah. So this is Snap-on, the tool maker we're talking about. Sales up 0.2% for the past year. The industry down 8%. And they give a 5-year earnings per share growth rate from the analyst for Snap-on. 11.2 versus decline of 5.8. So that's pretty good. They do pay a decent dividend, 2.5%. They use 44% of their earnings to pay that out. They do increase the dividend. The 5-year average growth rate on that dividend is like 14.7%. So you like a company that's going to be increasing the dividends there. So I'm kind of liking this, but it really depends on what you say. You're going to ruin my company I want to buy here.
Well, it's kind of funny. I guess I don't see many of these trucks. Definitely not blue. Their
White?
symbols white with red.
Oh,
So,
you're way off on that one.
Yeah, it's all right. But looking at the current price here for Snap-on, again, their ticker symbol is SNA. It's $343.93. 52-week range, the low here, 289.81, and the high, 373.90.
I didn't get the balance sheet information.
Oh, you go back and do that.
You want to do that? Or you want to wait till the end?
Go ahead.
That's right here. I'm sorry about that. I just thought it was your time to talk there. So balance sheet, very impressive here. Current ratio 4.4 versus 2.7. Debt to equity looks good, 0.2 versus 0.4. Net profit margin 19.8 versus 7.2. That's a huge profit, like 20 cents on the dollar for every dollar they bring in. Return on equity is 17.4 versus 13.3. Free cash flow looking good, $1.026 billion versus $692 billion for the industry, or $692 million for the industry. Now we can turn to you. I don't think I've ever done that since we were doing the show where I skipped the balance sheet.
It's all right.
Yeah, first time for everything. Okay.
Well, we look now going forward for Snap-on Tools again, or it's just Snap-on, I guess is the name of the company. Out to December 2026, this is the disappointing factor here. Estimated earnings per share, $20.51. Give us a target sell price of $340.47. So basically right along where it is trading currently. And I was kind of curious on this company. They reported earnings last week as well. And there's one thing that's interesting with earnings season, right? You get so many different options of companies we can look at. But I guess they had a good earnings report. Earnings of $5.02, beat by $4.64. And they said they were really helped by a pickup in demand from auto part companies and repair shops. And I was kind of digging through their customers. They got a lot of different situations here. They have obviously automotive. They then have construction, electronics, manufacturing, oil and gas, power generation, military and defense, medical device manufacturing. So their tools are used in a lot of different capacities here, even vineyards and landscaping.
Wow.
Yeah. But I mean, I do wonder, this company could be a benefactor from, maybe reshoring of manufacturing as, they need to retool or tool up those plants. So I was disappointed because I like this space. I think there's opportunity here, but again, the valuations are just a little bit too high. Maybe we're a little bit too late to the party.
And I also think too that I'm surprised they do all those other things, but it may not be a big percent of their business. We think with the growth of the economy, I'd rather have a more normal type of tool maker, not a Snap-on.
Yep.
So, all right. Well, gosh, unfortunately, there's a closing bell. Thank you.